Alright, Pack, welcome back to another video here on the Dividend Doggo Show on YouTube, and I'm bringing you in for the weekly and the yearly portfolio review. Today is the 31st, it is Saturday morning, sun's just coming up, so I'm going to dive straight into it. We're going to look at a couple of things relatively quickly, then look at what I bought this past week, and adding a little bit to the portfolio for the end of the year. New stock, question mark. Kind of briefly talked about this before, but we added a new position to one of the sectors in the portfolio, so let's dive in and take a look. So we ended the year right at the cusp of just under $60,000, so in January we're going to roll over that mark. We are at $59,174 in earned dividend income over just over 3 years, so we're right at about $20,000 a year on average since the portfolio was opened. Now, I do want to go over, you can see that the portfolio is in the green still, and that is mainly because of the fact that I took out a pretty large sum of funds. The portfolio was about $740,000 right in the beginning of June, and I took out some funds and it dropped down to about 510, and then we've just slowly been adding to the portfolio, and it's been up and down and up and down all year long. So overall market gains are looking pretty good for the all-time. This is what the different sectors of the pile look like, the slices. We have Coma Money, consumer finance, healthcare, utilities, monthly dividend stocks, and coming up here is industrial and railroads. So I'm gonna go ahead and dive straight into this one. It is down a bit for the week, but let's go to the weekly view so that you can get an idea of how we performed for the week. The week it was down right around $811, so really not that much fluctuation for the week. But we will dive in here and take a look at a couple of things. So first off, not too much in the way of fluctuation. Utilities were down a little bit, industrials were down a little bit, but we did add one new stock. I believe I used to hold UNP and I sold it a while back and I kind of regretted it, so I went ahead and added it back into the portfolio. This was a pure dividend purchase. This is just about 2 shares of UNP. I'm going to add to this position a little bit over the beginning of 2023 and build that up a little bit as well. So you can see that was the one buy for UNP. On the 30th, it bought about 2.14 shares of UNP, so that's pretty fantastic. So I'm not going to dive too deep into the week review because there's not too much to really go over, to be honest with you. A couple of pies were down, a couple of slices were up. All in all, not too bad for the week. But what I do want to show off here is year to date, because this is the last day technically of the year, but there's no more trading days in 2022, so this is how the portfolio ends up for the year's performance. So we're going to dive straight into that. If we look at this, we made $20,101 in earned dividend income for the year, which kind of skews the overall portfolio return. Now, if I was to take away the earned dividend income, we would be at a loss of $38,115.93, and I am certain that this would be significantly more on the loss scale if I had not sold a bunch of stocks in the mid part of the year in June. So overall, we are ending at down 2.82%. This is a money weighted average return. It is the way that M1 Finance shows things. You can see that there are funds taken out of the portfolio overall. Now, I did add quite a bit to the portfolio throughout the course of the year and continued to add all year long, even though I took out about $170,000 total. It does still show that it was only about $99,000 when you factor what was added to the account over the course of the year. So let's do a quick rundown here so you can see the different categories. Finance took a very, very large hit. This was mainly because I made a play to buy ILI Financial at the beginning of the year. That went down quite a bit. That's like about 6,000, I believe, of the losses for this sector. So overall, let's just go one by one. We'll go into Coma Money real quick. Coma Money, SHD ended down about 1.35% for my portfolio. A big chunk of this was added to. You can see where it was about 80k in June. I added a bunch to it. It went down, it went up. I just kept buying, and then it's kind of had this steady climb up down thing that it did all through the end of the year. But I'm very happy with the position overall right now and the size. I'm going to continue to keep growing that and just get it compounding more and more and more. Berkshire Hathaway also in there. Not too worried about that. That's going to be a long-term play and holding. So let's dive into consumer now. Consumer earned me a fourth of all of my dividend income for the year. A huge chunk of that comes from Altria. It is a big position in the portfolio. So overall, the gains are a little bit skewed here. It was down about 7.23%. It's actually down a bit more than that when you factor the dividends. However, all these dividends did roll into the portfolio into other positions. So overall, it is pretty good for the year. We were up about 10% for Coca-Cola. We were up a little bit on Altria, down on Home Depot, Costco, Lowe's, Target, and we were up a little bit on Pepsi. So that is how this particular slice of the pie ended up for the year. Finance was one of the worst performing sectors for me. It did earn $3,666.26 for the year in dividend income, which actually means that it just skirted by being down about 20%. So the money weighted average return came out to 18.38. A large chunk of that is JP Morgan, Citigroup, and as I said, the leader for this sector, I believe, it might be Bank of America, but I think it's actually still Ally. I did sell that off and rolled that money into another position. So overall, you can see there was some adjusted money added into the finance sector this year. And I'm just going to kind of ride this wave through and keep going. Don't have any plans to really add a whole bunch of money to the finance sector because I like the size that it's at right now. If anything, funds from that as far as dividend income will be rolling in and going into other positions in the portfolio for 2023. Healthcare I have just kind of maintained since the sale of a huge chunk of AbbVie. You can see that it is very green for the pie because of that sale. We're up $20,000 for market gains for the year, and we're up about $4,362 in earned dividend income. You can see the cash flow that it was down about 88,000. This is what my initial position that I put into AbbVie was from 2019. So I basically took all of my money off the table with that stock, and I'm just riding it through with the profits from how much it had gone up over the past 3 years. So I'm going to continue to hold that. I may add a little bit to Johnson & Johnson as we go here, but as you can see, AbbVie was very much green and one of the best performing overall stock choices that I've had since 2019. It's right up there with Vistra in its performance for the portfolio. And it really does. It shined through as far as stock plays that I made from 2019 to now. I definitely appreciate PPC Ian because he is the one that got me really interested in digging into AbbVie and looking into that further. I went ahead and made a bunch of purchases into AbbVie in 2019 and 2020, and I'm happy to reallocate that money around and kind of divide it up and diversify it a little bit better because a huge chunk of that did go into SCHD. Now, utilities, we can't go into utilities without talking about Vistra. As you can see, year to date, Vistra just was a huge play that I made in 2021 when the F.I.R.E aftermath in Texas essentially had the huge negative effects on the stock because they basically paid about 1.8 billion total, I believe. Maybe a little bit more than that. I believe they're still paying off a little bit of the damage from that it caused to the company. So I made a huge play. As you can see, I put in about $115,000 total into AbbVie in 2021. So I went ahead and took those gains completely off the table. That money is set aside for real estate projects right now. That's why you see the net cash flow is negative 113,000. So basically we made about $2,336 off AbbVie stock in dividends, and we made a market gain of $18,000 for the year. This stock was all over the place this year. It would go up and down, and it was very consistently up and down, and it ended just slightly in a little bit of a dip for the year. Duke Energy was just a solid little green performer there, earning dividend income, and just kind of stayed in the green, as were a lot of stocks for the year did overall perform in the red. Duke just barely was in the green there with its dividend income. So I do want to go to monthly stocks because that did shift a lot. A big chunk of the losses here are in BST, and this was shifted over to just BST. It did have the owner's rewards pie, but they've since done away with the need for having a lot of those other stocks in your portfolio at all. So I went ahead and just shifted that money over. We have added to this position a little bit, but for the year, you can see it earned about $470 of dividend income, and it is now down just in the red, $3,478. That is for the entire year. So I do want to stress that this stock is not for everyone. This isn't stock purchasing advice. This is just showing you the performance of my personal account and the money that I'm comfortable investing in the stocks. I am planning to add a little bit more to that position, maybe 2,000 or 3,000, get it up to about 10K for 2023, and then I'm kind of going to leave it, let it sit, and just compound that monthly income. It will be paying its dividend tonight. I believe it paid out today, and then I'll get that money in for Monday morning, so that'll go in and buy. Overall, this is a really new position. This was just added back as a category for the industrial and the railroad category in the beginning of December. So it only had about 1 month of data, but it was down about 7.7% from the initial purchases. I'm not too worried about this. There's been no dividend income earned yet because it's a very new position to the portfolio, and I am adding to UNP as we go here. So that's just something that I'm going to look forward to in 2022 and getting that through. Now, how did this compare overall when I'm looking at the portfolio? We are down about 2.82% for the year total. That is the money weighted average return. Last year's video, if you want to go see it, it is posted for 2021. This is what the video, the amount was. I was up 30% for the year, which was absolutely phenomenal. That was the money weighted average return. The earned dividend income was about 24,000 last year. I did trim a lot of my high yielding payers and my oil stocks in the end of 2021, which was a huge mistake. Something that I very much regret. I should have kept VLO, I should have kept CVX, and I should have just kept all of my oil pie, to be honest with you. I let some of the influence creep in of all of the EV hype, and I shouldn't have done that. So this is showing you what this is just a screenshot of the dividend portfolio from that year. I know it's a little bit hard to see, but if you wanted to watch this video, you can go to the end of it and you can look at that. So for the year last year, I closed out up about 153,000. That is with all of the stock market gain and the earned dividend income. So just the market gain was $129,565.07, and then the earned dividend income was $24,235.59. So year to year, when I'm looking at this, I was down a little bit in the earned dividend income, and I was significantly down in the market gains. This pales in comparison to how much I was down in 401k funds, because that was literally following the S&P SPY. For the majority of our 401k money, a huge amount of it, like 90% of it, is in the S&P 500 equivalent funds. All of those were down significantly, I believe down about 12% total for the year, versus the dividend doggo taxable portfolio in M1 Finance being down about 2.8%. In reality, it's actually about 6% when you think about the fact that the earned dividend income is factored in there of about $20,000. So it's actually a significant chunk of money that it was down about 6%. So I do want to thank every single one of you who is watching. We have made very, very significant progress over the course of the year. I'm very grateful for the channel growth and the fact that I get to put a little bit of the income from YouTube back into the portfolio and buy more stocks with that money. 100% of that money has been reinvested into the portfolio, and that is hopefully how that's going to continue for the next decade or so, as we look toward an early retirement in our early 50s. So I do want to thank all of you. I hope that you have a very safe, happy New Year's Eve. I appreciate every single one of you that watch the videos, that like, that comment, subscribe. I want to know one thing that you're looking forward to with your portfolio, either if it's a stock that you're looking forward to adding to in 2023, or if it's something that you're looking to sell. And I'm curious to see if there's anything that you're looking to trim or cut in your portfolio going into 2023. I am really excited to add to the railroads for UMP. I'm also looking at some Canadian railroads. I'm also looking at one particular Canadian bank stock that I might add to at the beginning of the year here. But overall, SCHD is going to be my primary go-to for 2023. I'm hoping that I can add a huge chunk of money to SCHD and continue to build that up and let that grow. So I do want to thank all of you again. I hope that you have a fantastic holiday. Be safe out there. Don't drink and drive if you're going to any holiday parties. I hope that you have a festive, happy New Year's Eve. Thank you all for watching, and have a great weekend.